Yes, Mark, where you got that right. The conversations continue here. Hello, welcome. It's another trading day right here in Lagos, Nigeria. Let's get to the top stories that set your agenda now. Starting with the oil market, we see the prices are range-bound in early Asian trade today. Investors are worried about Chinese demand, and they're awaiting further market direction from a U.S. interest rate decision that's due today. That's the last one for 2024, and we know how that drives the market. Brent crude down 0.1%, $73.90 a barrel, while the U.S. grade is still holding on tight to the $70 level, 0.6%, a bigger drop there for WTI. Unexpected weakness in consumer spending data from China, that's weighing on investor sentiment right there. Let's get a check on the FX market now. Let's see how the Naira is doing. That's how it performed yesterday, 0.64% down. 1,550 Naira to the dollar. That was the close. On the FM window, we know the FM window there still pushing on with that platform that keeps transparency in the FX market. 1,552 Naira, that's for NAFEX window, also down 0.21%. So we're still seeing weakness and this trading week before Christmas. All right, to other stories now. The African Development Bank Group has launched the Debt Management Forum for Africa, DEMFA. The bank is proposing this as a platform for representatives from the continent to share their debt status and challenges with the aim to reach a consensus on strategies to optimize debt and reduce costs. Our business editor, John Mekwa, is in Abuja and filed this report. Take a listen.
Findings by the African Development Bank indicates that debt crisis in Africa has surged by 170% since 2010, and the continent has spent about $74 billion in 2024 alone to service debt. Sounds like there's a need to take urgent steps. That's why the FDB believes that solutions can be found through the Debt Management Forum for Africa, and the meeting and the launch begins in Abuja, Nigeria's Federal Capital Territory. The meeting has in attendance high-level finance and debt managers from Nigeria, Ghana, Zambia, Ethiopia, and other countries joining physically and virtually.
We agreed in principle to restructure almost 90% of our public external debt.
The FDI, which many African countries focus on, declined by 44% in 1 year, in 2022.
The host, the chief economist of AFDB, Professor Kelvin Urama, emphasizes the need for the forum.
Financing for financing development in Africa will not only continue to be more expensive, but it will be scarcer as we go forward.
Nigeria's Director General of the Debt Management Office, Patience Oniha, is representing the Minister of Finance and coordinating Minister of the Economy, Mr. Wale Edu. He anticipates the potential of the Debt Management Forum for the continent.
The key message to each and every one of us today is that DEMFA should evolve rather quickly as a foremost forum that will actively and visibly contribute to continuous and long-term sustainability of public debt in Africa, thereby supporting economic growth and development.
It's not duplicating them.
The director of African Development Institute of the AFDB, Dr. Eric Ogunleye, explains the proposed structure.
That what we're doing through this forum is to raise the voice of Africa high, have a consensus, and be able to raise that voice, have one clear voice with which we can engage in the global system.
The forum is launched, objectives set. One of the major questions now is, will Africans speak in one voice to make debt work for the continent? John Mekwa, Channels Television News.
All right, so yesterday we got that red hot number for inflation numbers for November, and definitely coming in line with expectations from a financial derivatives company. But let's bring in Mr. Bismarck Rwani now. Tell us more about the numbers. Great to have you, Mr. Rwani. Good morning. So inflation for November, that was in line with your expectation at 34.6%. I guess it's the same factors contributing to this red hot inflation number for November.
Good morning, Ladi, and thank you for having me this morning. The inflation numbers came out as expected, exactly consistent with our forecast, and it increased to 34.6. The most important thing to note here is that this is the third consecutive monthly increase. Even though the increases are slowing, generally speaking, but it means that the whole idea that at the end of the year we will be seeing inflation tapering towards 30% is not going to materialize. What it does mean is that even for December, we are going to see a slight increase again. What drove this particular increase? One, petrol price increases. Two, the exchange rate weakness. Three, excess money supply in the system. And four, general cost of distribution across the value chain in the country. So generally speaking, we are in an inflationary environment, but the good news is that the rate of inflation increases and the rate of price increases is beginning to slow. But generally, when you look at core inflation increased, food inflation increased, and of course, headline inflation increased. But interestingly, monthly inflation actually declined. The monthly inflation is a much more accurate measure of the current situation because you are comparing the price of goods last month with this month, which gives you, which confirms to us and gives us the hope and the hope that in January or February, January normally you see prices come down because of post-Christmas activity. So in January and February we begin to see moderation. I would not be surprised if we begin to see inflation taper down to around 33% or 32% by February. Why do I say this? Because it was in February last year that we had the lowest value of the naira in the foreign exchange market, 1,910 to a dollar. Today, the naira has appreciated, but they're also wobbling again to 1685. I think, right? It's let's see, the naira is actually down at 1680. So compared to this time last year when it was slightly weaker, and compared to February this year when it was 1,901, 1,910. So when you put all of these parameters and stocking factors together, it tells you that inflation is still a problem for Nigeria. However, it might begin to moderate. But on one caveat, one major reason is that there's been a lot of spending, fiscal spending, without a corresponding increase in productivity. We are seeing this in terms of the budget that is going to be announced tomorrow. The Federal Executive Council has approved the budget, and the President is going to table that budget before the National Assembly. The whole idea of trying to actually placate the suffering of the people by spending money, but the spending has to be efficient. That is our biggest fear. It could be inefficient spending, even though the nominal figures are high, but it could be inefficient spending, which means that there will be leakages in such a way that it might be counterproductive. But generally speaking, we think that based on all the projections, based on the price of oil, based on on the structure of the foreign exchange market, we might begin to see some moderation in the inflation rate January, February in 2025.
All right, and talking about 2025 and budget presentation, we were supposed to have that today, but that's been pushed till tomorrow. So, looking at the budget proposal so far, how are you seeing this impacting inflation in 2025? What kind of spending would help tame inflation and also give some strength to the naira?
Well, you see, what has happened is that, let us not preempt, because the president is going to present that budget tomorrow. At this point in time, whatever we say about the budget is speculative. But we can be guided by the medium-term expenditure framework. And in that document, I think we're seeing the inflation target of 15%. I do not think that we're going to get down to 15% inflation in the near term. Even if inflation begins to moderate, at the end of 2025, most analysts are of the opinion that it will be anything between 25 and 28%. That's a far way from 15%. So the budget could be aspirational, the budget could be ambitious, but the thing is that to be successful is to be realistic. I do not think that 15% inflation is going to be achieved. On the growth side, yes, the growth target, when we hear the numbers, the growth target of anywhere between 3 or 4% is achievable. The exchange rate projections of 1,400, it looks more realistic than 800 at this time last year. So, but I don't want to delve into the budget until it is an official document, which we can discuss. But whatever I'm saying now is based on extractions and extrapolations from the medium-term expenditure framework.
Right, and looking at the inflation numbers now rising. That's the month before Christmas. That's for November. So this seems to be giving us direction, what to expect this Christmas. But how resilient is the Nigerian consumer? How resilient do you think the Nigerian consumer will be this Christmas? And how are they going to navigate most of these high prices?
The Nigerian consumer is embattled, but the truth is that if you look at the price increases, the changes that are and adjustments that have been taking place, in the last 2-3 months, the price increases have not been the magnitude of the price increase and the magnitude of the changes have not been as dramatic as it was 6 months or 12 months ago, which means that you can see that the petrol price actually, which is a key variable, Dangote is announcing that it's a 960. The 8th man is saying that we want it at 900 because the crude price has come down. So if the price of petrol now is at 10.70 in the pump, the price of diesel is at 10.55. They've been relatively stable. The exchange rate has been hovering around anything between 1,700 and 1,625. So it's been relatively stable. So those are the things that factor or play in to the standard of living and the quality of life. But let us not deceive ourselves. Nigerians are sweltering, Nigerians are in difficulty, and this Christmas, unlike previous Christmas, this one is going to be a Christmas you do not want to remember. But hopefully, 2025 is going to be a better year. There'll be more things, there'll be better productivity, and so on. But one interesting thing, though, is that the price of cocoa has gone up to 11,821. It's a record high. A year ago, cocoa was selling at 2,000. The thing has gone up by almost 400%. Cocoa export earnings are now going to be as much as $2.7 billion and about 5% of our total export earnings. So that's a major development. So before we used to talk about oil and oil price, now we're having cocoa. And the cocoa proceeds are going to 4 or 5 states. We're talking about Oyo State, talking about Osun State, talking about Ekiti State, and Ondo State. That's where the cocoa is grown. So generally speaking, we should be seeing those people really having they'll be having the best Christmas, just like those in Ivory Coast and in Ghana. So that's some good news at this point in time. And again, export diversification into agriculture, which is a major employer of people, is significant. So I think that's one green shoot that we're seeing.
Right. So I guess the Grinch for Nigerians this Christmas is inflation and currency devaluation at this time. But we're halfway past December now, over halfway. No fuel queues, as you said. So do you see us setting a record this December? No fuel queues.
I didn't get the question again. Can you
do you see us setting a record for this December with no fuel queues?
No. What I'm saying is that December, the rate of inflation is going to increase in December, but not significantly. 1. 2, the price of, you can see that the price of rice, the price of onions are up, but we have seen the price of beans drop, and we've seen the price of pepper come down. All of that because there's consumer resistance to higher prices. But having said that, compared to December last year, we think there'll be a marginal increase in inflation, but definitely this will not be a Christmas to cheer. But there's this thing about the rail transport and the free transport for all Nigerians. The unfortunate thing is that the rail points are very few, and the rail passengers are not that many. So maybe they will extend it. I think the president probably will extend it to road transport and air transport. But again, that doesn't address the fundamental issues that the cost of doing business, the cost of carrying these passengers will increase. After 3 weeks, they will come back to normal again, and the cost, effect of devaluation, the effect of the price of petrol, the effect of the price of cooking gas, and the price of food will catch up with us. We have to do something about productivity in this country. These palliatives and temporary relief will not deal with the problem of productivity. It's all about output and productivity, and also minimizing the printing of money. In other words, the fiscal deficit. It's now projected to be about almost 4.5% of the GDP numbers. It could have been worse if subsidies were not reduced and the exchange rate were not aligned. But even then, at this rate, we still have to bring down the amount of fiscal deficit in the economy.
All right, Mr. Rwani, definitely. I'm hoping we get some kind of white Christmas at this point. Thank you so much. Always great having your perspective, Mr. Bezok Rwani, CEO of Financial Derivatives Company. Thank you.
It's my pleasure. Thank you very much.
All right, we'll take a break now. When we come back, more conversations, this time sustainable energy. That's coming up next. Do stay with us. All right, now to our next conversation. Experts believe sustainable infrastructure financing is critical for Nigeria's development. Let's explore the potential of instruments like Sukuk and delve into the effectiveness of existing government initiatives and examine how to accelerate the adoption of renewable energy solutions. Shout out to Band A customers at this point. Join us for this conversation. We have Mrs. Korede Demola Deni. She's Executive Director for the South, the Alternative Bank. It's great to have you. Good morning.
Morning, Ladi. How are you?
I'm fine.
Good.
Well, depending on where we're looking at the prices from, but at this point, I'm hoping for a fantastic Christmas, even though the inflation numbers and most of the macro data, it's not looking so good, making it a little tough to have that December. But let's look at the alternative energy.
Yeah.
We're seeing Nigerians dealing with, high energy costs at this point.
Yeah.
But we're also seeing the Sukuk platform at this point. It seems to be getting some traction, but it seems there's some lag in embracing it fully. How are you seeing that?
Okay, let me give a little background to Sukuk. I think we started about 2013 with Osun State government issuing a Sukuk to build schools, which they did effectively. And then after that, I think about 2017, the federal government raised money, I think about 100 billion for roads. How has that gone? I think that has been good, successful. But what I see, and I'm not sure is only limited to what you see in Sukuk, is a little bit of what is happening everywhere. Sukuk, by the name, is a kind of way of raising money, but it's strictly it operates under the Sharia, right? When people hear that, they might say, no, I'm not interested. It looks like it's only for Muslims, but no. So, one of the things we all need to do, the stakeholders, is about the awareness. What does this mean for you? And really, when you think about a Sukuk, when you invest in an instrument, in any project, it means you have a stake in that project. You have a right to know what's happening in that project. So I think if people understand, there will be a lot of more embracing of that way of financing. And it's not only the government, we the banks, like the Alternative Bank, we're all doing our bit. But I think we just need to keep on emphasizing that the Sukuk is also another way of raising funds, even for the corporates.
Right. And,
right.
Looking at the corporates and raising funds also for the public sector, how much transparency do we see with this platform?
You see, it's something about doing, when you say Sharia compliant, it's called also ethical banking, right? So there's a lot of transparency. When you say you own something, you own part of something, there's a lot of transparency. So sometimes, maybe some people might like to shy away from it because you need detailed information as to what you're doing, right? I'm not trying to say compare it straight to the bonds, but when you do the bonds, which is more like a Sukuk, but it's just that it's not under the Islamic finance principles, the bond, the government is raising money. You probably don't know. When you see Sukuk Road, you know it. You see it there, that look, this road was funded by so-and-so people, you know. So I think it's just for people to embrace that reality, that we need to be transparent, we need to be fair. And, you know, in Nigeria, those are the things we're all trying to cultivate as a habit until we get there. But meanwhile, all stakeholders must push to make sure that we get.
We've had comments, you know, in some quarters that, you know, they feel like the government is not taking advantage of other, you know, funding sources at this time. I would like to get your view on that. Is the government getting more creative, you know, with where they raise funds from?
I think they are, because there's been the PPP project, there's been the presidential, PIDF, right? And the government actually raised money for the Lagos-Ibadan Expressway, the, the Niger Bridge. But how long did it take? You know, the issues are, you know, what I say to everybody is, these things are laudable, but the Nigerian factor also makes it not go well. It took so long to conclude those projects, and I don't know, can we even say the Lagos-Ibadan Expressway is completed now? You know,
what part
cost
of the
overrun, you know, and things like that. So I just think these are laudable projects, but the execution, again, is really where we have to watch.
Right, and do you see the government embracing more, you know, Sukuk funding source?
I think they will. There's already some information that we're going to have some between now and January, and I think the paperwork is going on. I think
looking at, you know, 2024 at this time, how would you say, has there been improvement with adoption of Sukuk if you compare that to maybe say 2023 or a year before that?
Definitely. You know, you might not see it on the large scale you want to see, because even us as bankers, we also sell Sukuk to our customers. Put your money in a Sukuk. For those, you understand. What we need to see more that we haven't seen, when the Sukuk is first issued, it's primary. There can be secondary. That's an active market. The FMDQ is trying to promote that, but is not yet active. So you see that when people have investments in Sukuk, they hold it to maturity. You can do a lot with it. You can go and get money. So, you know, you can do a lot with it, but people now hold it. But that's part of the awareness we're talking about. When people know that, look, if I run into any trouble, this is really, it's an asset. It is an asset. And those are the things we need to get people to understand.
Right.
And probably with also the government.
And I did, you know, mention, you know, high energy costs. You know, a lot of consumers are reeling under, you know, high tariffs at this point. And also if you're trying to power, you know, generators, petrol price is really high. So looking at affordable energy, you know, at this point, what's the way forward, you know, going into 2025?
The way forward, again, for me, is all stakeholders. I'm not an advocate of the government doing everything, but they would do something. They will provide maybe some concessions. The banks provide, my bank, for example, we're very high on alternative financing. If you come, we can give you facilities to run you through between 2 and 4 years. We also let you understand how good it is for you, how you would save money. Some people say you don't save money initially, but you save money over the long run. So I think all stakeholders come together, the government, concessions, the banks, awareness, let people know. Because, you know, when people are all complaining about, the generator, the this, and these are also clean form of energy. So you're also contributing to a cleaner environment. So, well, for me, I think it's something that should be embraced. We have seen the advantages over time, and I think for the country, it would also be good.
Right, and you know, when we talk about affordable at this point, we know the central bank has been looking to tame inflation, you know, raising rates, and we've seen interest rates at levels we've not seen in a long time, and inflation is still, you know, a headache, you know, at this point, looking at the numbers that came out yesterday. So how much of the interest rate hikes, how does that impact, you know, what's playing out with Islamic, you know, lending facilities?
Okay, the truth is that we're in the same environment, so we don't expect anything fantastically different, right? But the reality again is we have some structures that maybe you could say are more preferable over a structure from a conventional bank. Because some of our structures, for example, as the interest rates are rising, we don't move our markup rates like that, you know, because in Islamic banking, you're not looking at money for money. You're looking at money, you want money to buy an asset, to improve your lifestyle, to improve wealth and all that. So that's a bit of an advantage in that sense. And I know people like to see exactly what you're giving up to get the asset you want to buy. So, you know, I think some advantages overall, and I think the Islamic financing, especially for alternative banking and for alternative financing, is very good for alternative energy.
I'd like to also get into your industry and, you know, the kind of conversation you guys are having in the financial services industry. How are you guys looking at inflation? How are you looking at interest rates? Do you think this will be with us for the longest time in Nigeria? High interest rates, high inflation.
Okay, and this is, you see how we're looking at it. Maybe let me say this is a personal view from me. I think that we're almost getting to the end of the high interest rates. I had thought, for example, by the time this last report came out, we should have seen a slight dip, but I didn't see that. But I think as some of the policies of the federal government start getting into place, we'll start seeing it. For example, I didn't mention the Consumer Credit Corporation. There's a lot they're doing around the CNG, giving people facilities through banks to make sure they embrace alternative energy. So that, you know, by the time those things start seeping, it's slow because, like I tell people, the economy wasn't bad in a year. It took so